Welcome back. You're watching Chart Busters, and one stock which is on the charts right now is Star Cement, relisted as Star Cement. Remember, earlier it was listed as Star Ferro and Cement, the parent company which reverse merged this Star Cement, not Start Cement. That is the one that we have to tag right now and watch. Rajesh Kumar Ravi, the research analyst at Centrum Broking, now joins us to give us the future prospects of his analysis of the future prospects of the company. Rajesh, thanks a lot for joining in. First up, we understand that the biggest delta for the company would be deleveraging or paring off the debt, which will come from the subsidy that the company receives. So what exactly is the current subsidy outstanding for Star Cement, and how much do they expect to recover in the next 2 years?
Yeah, hi, good morning, Mangalam. Yes, Star Cement is done many right things, and this is where we believe that the company is poised for further re-rating. In terms of subsidy outstanding, currently it's around 800 crore is what is due for the company to receive from the government. And based on how the management is looking into the subsidy pool which the government has created for FY18 to disburse to various players in the northeast region, they are hopeful that they should be able to receive around 300 to 400 crore in FY18. Out of which 200 crore would be the capital subsidy and the rest would be the freight subsidies. They have already received 61 crore in month of May. So obviously there is more to come, and if that comes through, that will help the company to deliver the balance sheet and also plan their future capex.
Okay. All right, Rajesh, hi, good to speak to you, Rajesh. Nigel on this side. So you're saying that 300 crores is what you're expecting in terms of subsidy to be given to the company. That's the first part, and out of that 20% has already been received, right? 60 crores has already been received. Great. And for FY19, are you assuming that a bigger chunk could be received? If you could tell us that for the next couple of years, what kind of a subsidy they could receive? And also, Rajesh, since you're talking about a number of 300 crores, in the last couple of years, how much subsidy they have already received?
So, see, what has happened is the capital outstanding that we are seeing currently, out of that 200 crore is the capital subsidy, which is, many state governments also keep on, incentivizing new units.
Correct.
So, this is where the 200 crore is there, which is due since FY14.
Okay.
And the rest that we are factoring in is the freight subsidy, which is unique to the Northeast region under Northeast Industrial Promotional Policy Scheme.
Okay.
So, in the last 3 years, they have hardly received post the UPA government formation. There have been some policy changes, and that is where this subsidy inflow has rather got stuck up. So, last year, FY17 start, they received 25 odd crores, and start of FY18, they have received 61 crores.
Fantastic.
So, that is where the pile-up has grown to around 800 crores currently. And the management is hopeful that the government will clear off because Northeast...
Rajesh, just to make things simple for our viewers, you're saying that you're expecting quite a few of these subsidies to come in, etc. You've explained to us about the capital subsidy as well as the transport subsidy. Short point, FY19, are you expecting the company to be a net cash company? Is that possible? And
yes.
Today, what is the debt that they have in their books? So you're assuming that the entire debt gets wiped out. Can you clarify that to our viewers?
So currently the gross debt on books is around 940 crore. And net debt would be around 910 crores.
Okay.
So 800 crore is the gross debt currently, and 770 is around net debt.
Okay.
Which currently is, which we expect if the subsidy receipts from the government comes through, which we are factoring in around 650 odd crores, that should help wipe out debt on books, and that is where we expect that the company can become a net cash company in FY19, and that will obviously be a big delta in terms of helping the company plan its future capex. So we are factoring in around 350 crore this year and around 250 to 300 crore receipts from the government for next year in FY19 also.
All right, Rajesh, that is as far as the net debt is concerned, or rather the company will become net cash according to you. But what is the current EBITDA per ton that the company is giving, and at the same time, where do you see that headed in the next 2 years?
So FY17, the company has delivered around 1450 rupees of EBITDA per ton, one of the highest in the industry. Obviously, 400 odd would be the freight subsidy in that. But the good thing is the pricing environment in the Northeast market has stabilized after almost 5-6 quarters of volatile pricing. And that is where the EBITDA per ton for the company in Q4 got restored to around 1900 odd rupees. There was some incentive. So the reported number were around 2100 rupees per ton.
Including subsidy.
Adjusted would be around 1800 odd something. So this quarter also things are looking bright because pricing has been significantly improving over last 6 to 7 months. So demand is also expected to be robust in that market, and because there are limited three companies only, major companies, and that is where with a good demand all these companies would stand to benefit. Star Cement will be the biggest beneficiary of that, followed by Dalmia Cement.
Alright Rajesh, your point is fairly taken as far as Star Cement's prospects are concerned, but remember the stock is now trading at 130 rupees, which is at your target price of 129 rupees. From here on, what is the upside for Star Cement?
Yeah, so two things which need to play out. Obviously, the stock has given very strong returns. After lagging in the preceding, till December, Jan, the stock had underperformed the sector. So now from here on, few things which need to play out. The pricing and demand environment in Northeast need to sustain, at the stable level. If that happens, the earning upgrade will follow through. And secondly, the subsidy, the amount which we are all factoring in, and obviously, as I said, key things in the past have lagged in terms of the subsidy from the government. So those are the two further re-rating points for the company. Additionally, the company has also done good things, that they have stabilized the costs. They have reduced their overhead cost, promotional expenses, which has also been helping the Star Cement deliver good set of numbers.
Right.
And with the coal pricing in the Northeast is at low level, whereas outside Northeast, all other players are facing inflationary pressure in the fuel cost. This is one place where, local coal is abundantly available. Absolutely. And that is where that would be another positive.
Absolutely. Rajesh, you said around 1800 rupees is what you are seeing for the coming year in terms of EBITDA per ton?
Yeah, so that is where if the pricing environment sustain on the higher side, like we are factoring in 1700, but there are scope for the company to deliver.
And sales volumes, Rajesh, very quickly?
So sales volume, the company has been delivering good set of numbers. We are factoring in around 8% volume growth.
That will be around
3 million tons is what we expect the company to deliver in FY18.
So 3 million tons at around 1,700 rupees will give you an EBITDA of around 510 crores. Possible for FY18?
Yeah, that is where we are
targeting
that 520 crores.
So Rajesh, you're sounding very, very confident. Just to tell our viewers, remember Star Ferro and Cement was earlier listed. That got delisted because there was a corporate structure that was rejigged. And now we have the core thing. So the holding company discount did get out of the way. Currently the stock is trading at around 130 rupees. It's got relisted today. Rajesh, very quickly, I wanted your view on this. If someone bought the stock at around 140 rupees before it got delisted, the effective break even would be around 105, 106 rupees. So they in fact are making good money today. They would be sitting on a near 20% gains. But the promoters, they seem to have had the best party because the equity has gone up. The promoter holding has gone up by a good 10%. Just wanted your view on that. The promoters seem to have gained the most. As per what the numbers look like, clearly what they're doing as well is a step in the right direction. But I wanted your view on that. And secondly, if someone is holding the share today, what would your recommendation be? To hold on to the stock, or in fact they could book some profits?
I believe from a minority shareholder this is good because the company is doing all the right thing and macro environment has also improved for the Northeast players. So Star Cement obviously will be delivering good set of numbers. So the only thing is the subsidy receipts, which is where there are certainties issues which is there. Other than that, the companies are doing good stuff. So from an investor perspective, even if the investor continues to hold on, there are good set of numbers that we are factoring in. So that should lead to further upside. May not be in a near term, maybe 3-6 months. From a 1-2 year perspective, this company still holds promises to deliver good set of numbers, and that will re-rate the valuations further.
All right, fair point, Rajesh. Thanks a lot for joining in. Seems as though the promoters definitely have had the last laugh as far as this structure is concerned. But as we end Chartbusters, just reminding you that Nifty is below that 9600 mark again, and Lupin is currently trading at the low point of the day. We will track all the markets going forward in trading hours. Stay tuned to CNBC TV 18.